our next guest made a pretty prescient call about the markets. He warned about the markets when he was on the show at the beginning of the month. Take a listen.
The breadth of the technology sector has been pretty weak over the last 4 to 5, 6 weeks. I think we're going to see more names kind of fall off in October. And I think that's what portfolio managers should be really focused on right now. Make sure that what you do have in the portfolio today is something you feel very good about going through earnings season with.
Now he says the sell-off is about to get even worse. Let's bring in Mike Wilson, Chief U.S. Equity Strategist at Morgan Stanley. Why worse? Why wasn't that it?
Well, I mean, it's in process, okay? So the things we've been looking for, rates going up too high, putting a cap on valuation in the most rich parts of the market, which is tech, growth stocks, some of the small caps, that's beginning. And by the way, unless rates come down, we're capped, right? So I think that to me, that's the issue here today is that what are you playing for at this point at the index level, right? It's getting harder. 2780 is kind of as far as we can go unless you want to bet on another melt up, okay? So it's going to get worse because of liquidity. What Steve said is spot on, okay, which is that the QE, the QT, okay, is what people are underestimating. I agree with you, Karen. It's not a surprise, but the problem is that we finally flipped. So the combination of QT accelerating, ECB, by the way, started tapering on October 1st, and this is the blackout period for share buybacks. So all three of those has created less liquidity in the marketplace at a time when we need more demand for supply. And that's why rates spiked. So now you're kind of in a bad situation. So this could go on for another couple of weeks in that regard.
So where does earnings fit into your calculus?
So earnings are important, obviously. I think earnings are going to be fine. I don't think there's going to be this is not going to be a disappointing earnings season. Guidance is a wild card. We wrote a note last week about margins. We're very skeptical about margins next year. The question is, will companies actually talk about that in this earnings season? I don't know. But even on a good earnings print, my biggest concern is that they just fade it. Okay, so Netflix reports tomorrow night. I don't know if it's the most important one, but it's important because this is a classic stock where there isn't a lot of valuation support. Meaning, nobody really knows what this thing is worth. Okay, we can kind of make up a number. Okay, and if they put up a really good number and the stock sells off, I think that's going to be a
test
bad
of faith. In other words,
well, I think what's going to do is people are going to start wondering, okay, what other expensive stocks do I have that I need to de-risk? And we've seen a lot of that already. The good news is, these mid-cap software companies, which is arguably the most egregious part of the marketplace, they have derated. I mean, they've come down 10, 15, 20% in some cases. So it's in process. I don't think it's getting worse, but it's in process.
So I hear your cap on the market near term, but how about a real fallout? Because I think that's what more people are looking at. They looked at the velocity of last week's move and are very scared right now. Do you think this market has the ability to pull back even with very strong earnings and in a dramatic way?
I think because of the liquidity picture, it can easily go back to 2,600, 2,650. And we're still in a bull market, so it's not like it's the end of the world. But and look, at least people are thinking about that now. 2 weeks ago, that wasn't even a topic of conversation. It was like, well, we got earnings coming up, and by the way, we made new highs every week. So I think that just the skepticism alone is a healthier setup.
So bottom line it for us in terms of the sell-off being in process. How long is that process, and how deep is that sell-off?
So let's go back to the real narrative we've had all year, which is this is a rolling bear market where you've kind of gone through all these different sectors and areas. We're into the last phase, okay? U.S. stocks, U.S. growth stocks in particular, small cap stocks are finally getting it. I think another 10% in that space, that maybe 15 in some of the names, okay, will be it. That could take us down to 2,600, maybe 2,500 if it gets really nasty, okay? And that'll probably be the it for the rolling bear market, okay? And that'll probably be a good place to start buying.
Another 10 or 15% in the growthier areas of the market, namely technology. Do we see a commensurate rise in the value sectors of the market?
Well, that's the thing. We've been favoring value over growth because it's just going down less. So, it's a moral victory. There are names for sure. Look, you all pick stocks, okay? There are names to buy. And look, there's been a lot of damage this year already, and some bargains have been created. Okay, but right now we're having more of a market event. This liquidity situation is more of a market event, and so it's just hard to pick stocks in that kind of an environment too. So it's going to be tricky in here in the next couple of weeks for sure.
Mike, thank you. Mike Wilson of Morgan Stanley. What are the names that you could buy in your view?
I think, look, you look at Facebook, for example. I mean, did it make all the way move back to 150 or so when Zuckerberg testified on Capitol Hill in the spring? Yeah, so maybe that gets interesting. I mean, Google's had a pretty precipitous decline. I think Netflix in earnings is pretty cool. You mentioned Adobe, but I'm sort of with Mike on this. I think the path of least resistance and the pain trade is lower. And I'll mention one other thing. Look at today's action. Not a big deal. The S&P closes down 10 handles, but went from 10 handles down to 10 handles up to 10.
But it closed below the 200 for 2 out of the
Which
last
is a
3
big
days.
deal.
I mean, I think that's, you know.
But the low intraday has been 20 handles higher. So the low has, we've been making a series, granted, it's a handful of days, but we've made a series of higher lows intraday.
What do you do if Netflix sells off, if a decent number sells off?
I think I'll pose it the other way. What happens if it's not such a great number and it rallies? Then that's a buy signal for the market. I think that market is saying to you.
I sell that scenario. I don't know about.
I mean, look, Mike's point is that you had these high multiple stocks that are from, and by the way, he talked about mid cap, and this is definitely not. This is mega cap. I think these multiples are tough to buy in a growth environment that has less growth.